Good morning, everyone, and welcome to the Moneycontrol live stream. You are watching markets with Santo and CJ in association with M Stock by Mirae Asset. Yes, guys, it's over. It's finally over. The Fed has dished out a 75 basis point rate hike, the biggest rate hike given by the central bank in more than 30 years, nearly 30 years actually. And but the market's reaction is one of relief. If you look at the Nifty futures on the Singapore, they're indicating a gap up opening for the local market. Even Wall Street rallied towards the end of the session and closed towards the day's high. If you look at the commentary that came in from US Fed Chief Jerome Powell in the press conference, he continued to indicate that the fight is against the inflation at this point in time. Nothing else matters. They are probably going to consider another 50 or 75 basis point hike in July and in the September meeting going ahead. Apart from that, on the economic front, he did suggest that there has been no broader signs of economic slowdown in the larger economy at home, even though we have concerns with China, we have concerns with Europe. Overall, inflation has been one dynamic that has been hurting consumer sentiment, but no signs of slowdown yet in the book of the central bank. Apart from that, the sense right now in the market is, Santo, that while Fed has indicated a 50 to 75 basis point rate hike going ahead as well, I think market is somewhere relieved that at least the central bank is now trying to get ahead of inflation instead of staying behind it for the past 1.5 years now. And that probably goes to show that if the Fed is ahead of inflation, then as and when the economy does turn for the worse, and probably there are signs that recession is emerging, maybe the Fed will be in a better place to actually help the economy out. Because if it is behind the curve and it is hiking rates heading into a recession, that could be terrible news for the stock market.
Well, CJ, that's the delicate trade-off, right?
Yeah.
If you keep hiking rates, but it is also very possible that, you will end up tipping the market into recession. I mean, you can say that over time you will kind of, put things back into order, but there's also the short-term pain to deal with, which is what the market is worried about at this point. And just take a look at the cash market traded turnover on the NSE yesterday, less than 37,000 crore. This is the lowest since April 2nd, 2020. So huge fall. Clearly indicating that, retail and HNIs finally seem to be taking fright, and there's no let up at the same time in the selling by foreign institutional investors. CJ, now the market at this point, I think, is kind of becoming hollow because trading volumes are steadily been declining, and if the selling continues, you're in for real bad news. You could see some kind of a relief rally today, tomorrow maybe, because the market had already priced in or was trying to price in the 75 basis point hike. But look a little further ahead. Now you have got higher interest rates, you've got quantitative tightening, you've got weaker earnings. All this makes a strong cocktail for stock prices moving down. Now the chatter is that we could see some kind of sideways movement or a gradual drift, but typically when prices stay stagnant for some time, fatigue starts setting in, and then you could see the price correction.
Yeah, I mean the movement on the retail side will be very crucial to watch, especially now that 1 year returns have also turned negative, not only for the Nifty 50, but if you look at the Nifty mid cap as well as the Nifty 500, the entire broader market is now giving negative returns on a 1 year basis, 1 year rolling basis. So clearly, usually you will assume the retail investors, when they make their decisions, they usually would look at past performance. That has always been their anchor for making investment decisions. Also, if you look at some of the other markets at this point of time, I mean, if you look at corporate bonds, if you look at real estate, they are offering much better possibilities going ahead over the next 1 to 2 years, whereas the outlook for equities at this time is quite muddled, especially when you adjust your returns to inflation, which is quite high. I mean, the attractiveness of equity has clearly taken a knock, and it will be very interesting to see how that retail dynamic improves, because they have been the anchor for this market. They have been the one who have been acting as a shield in front of that brutal selling from FIIs over the past 8 to 9 months. So this is something, it's very interesting times. Like the Chinese say, may you live in interesting times, and these interesting times are probably not for the good at this juncture.
Well, that said, let's take a look at the stocks that have caught the attention of me and CJ here. So starting with Tube Investments. Now, the company is an engineering company which manufactures precision steel tubes and also industrial chains, car door frames and bicycles. steady performer, CJ, and this is the kind of environment where she should be sticking with kind of companies that are delivering consistent growth in earnings. Now, FY22 numbers were really good. You saw almost the top line doubling and almost a threefold rise in earnings as well. The company has been maintaining its margins. Now, what the company is trying to do is, it's mainly catering to the automotive segment, but it's now trying to go beyond that, get into, increase its exposure to the railway and power segment also.
Okay.
Its acquisition of CG Power has paid off pretty well, and now CG Power is one of the top 10 transformer companies globally. So, Tube Investments will be looking to leverage that also. Besides, there has been a steady improvement in the balance sheet. The company has managed to bring down its borrowings, almost halved it. Also, receivables has gone down very sharply. Inventory has also come down very sharply. And besides that, the company is now planning to get into production of electric three-wheelers. Now, actually the company had planned for it in the fourth quarter of FY22, but because of the semiconductor shortages, this plan has been slightly moved forward. So, most probably the company will be getting into that in a couple of quarters from now. Consistent performer. The thing against arguing against this company would possibly be that maybe the valuations don't offer much of a comfort, but all said, there are plenty of positives in it at this point in time.
Santo, I'm just curious, for a stock that you have spoken so well for, it's still been underperforming the market throughout this year. I mean, if you look at the losses for the year is about 11% compared to 5 to 6% losses for the Nifty 50 at this juncture. So clearly, even though probably the earnings story is looking good, the outlook is looking good, investors are still very skeptical, likely because the valuations leave so little on the table for investors to buy the stock at this juncture. Also, all the borrowings have come down, debt remains a concern, especially in an environment like this where borrowing costs are on the up. Probably if there are more refinance activity to happen going forward, all of those refinancing of debt will probably happen at a much higher interest rate than the company has seen in the past. Apart from that, even on a short medium term technical indicator, look at technical indicators, they are also indicating a weak momentum in the stock at this juncture, and that will likely continue in the near term. So therefore, I can understand why there is skepticism on the counter at this point of time. Plus, domestic mutual funds as well as the promoter of the company, they both have been reducing their stake in the counter in the March quarter, although it has been offset by some buying from FIIs. But clearly, there is a jostle or a tug of war between the FIIs as well as the MF in terms of where the stock is going to head in the future, Santo. That's at one stock where, yes, it has been underperforming recently, but I feel that this underperformance is a little unjustified. I mean, if you look at Tata Communications, the stock has been under pressure considerably in FY23, largely because it was one of the biggest performers of 2021, 2020, and probably became, a collateral damage in the overall market correction that we have seen. Now, after 40% declines, I think, Santo, the valuations have become quite attractive from a longer term perspective. Yes, given that FY23 earnings will take a knock, brokerage firm IIFL has downgraded its EPS estimate for the company for FY23 by almost 10 to 13%. But in the next 2 years, that is FY24 and FY25, IIFL believes that earnings could compound at a healthy rate of 25% annually. So clearly, the near-term headwinds are there, but if you get past that, the longer-term, tailwinds for the stock are quite considerably strong, given especially as internet, penetration is expanding in this country. Plus, export business of Tata Communications is also looking quite good. So, after a 40% decline, Santo, clearly risk reward have to be attractive on a stock like this.
Well, just going through some of the reports that analysts had put out after meeting the company. Now, the main concern among analysts is that the company is saying that there will be an improvement in data revenues. The company has said that there will be double digit.
Yeah.
But what both CLSA and MK is also saying that they are not being specific. Now, double digit is pretty broad in that sense. It can be anywhere from 11 to, or it can be from 10 to 20. That's one.
Yeah.
Secondly, there's no specific timeline also. Now, what CLSA is saying that there is some recovery in the data revenues, but it's been pretty muted. So the timeline is pretty much important to understand by when that kind of recovery that the company is talking about will finally play through. Also, CLSA has cut the price target for the stock very sharply. In fact, it was some 1400 plus and it has reduced it to about 1077. That is also roughly 1100 is the target around which MK has also set on the stock. Now, if you look at the difference between the current market price and the target price, there is very little room. So, that is what.
Yeah, hence my point, Santo. I think the market has discounted a lot of these concerns that brokerages are talking about. It's not that these concerns are just cropped up overnight. They have been there ever since the company's earnings came out 1.5 months ago. And I feel the fact that you're talking about, that there is the stock price currently is closer to the consensus price target for the stock after the massive downgrades we have seen. I feel that the negatives are priced in, and therefore probably only way for the stock ahead would be to look at the upside, for investors to look at the upside from a longer term perspective, and that is my point of view here.
Well, Cummins India is the next stock on my watch list. Now, again, a very steady performer, but the company has.
Your favorite capex theme?
Yes, and in fact, capex is the theme one should probably look to play in the year ahead, considering that most of the theme stories have now gone out of the window. Now, Cummins is shown some pretty strong numbers on the export performance. A lot of it has come from the Middle East countries and Latin America. 66% growth year on year in export volumes. Domestic story has not been all that great, just about a 7% increase there. However, the company has not given any specific guidance, and the reason is that they have been facing a lot of supply disruptions, and probably it would be only fair to the investors that it does not kind of make any lofty guidance and then result in disappointment over the earnings growth. So again, CJ, it's a very steady performer there. It's seeing data centers as the main driver of its growth, and the other trigger for the company is that once the new pollution control board 4 norms come into play, Cummins is already making gensets to cater to that. So that is an area where it will find itself on a strong footing. Genset growth was pretty strong in the fourth quarter, almost a 66% year on year growth. So these are some of the things that are looking in favor of the company at this point.
Well, Santo, the genset growth was clearly driven by the ongoing power crisis in the economy, but I feel that probably once that crisis abates, you will see this segment coming off quite considerably and maybe normalizing the growth there. Apart from that, you talk about the capex story, Santo, but I am just not convinced that capex is something that is just going to be a story like steel was or IT was last year. This is a very a long gestation story. Plus the sort of macro environment that we are in, it just doesn't feel like that companies out there or power generating companies out there are going whole hog to expand capacity in the coming years. That uncertainty is also visible in the fact that Cummins India refrained from giving any sort of a revenue guidance for FY23. That clearly goes to show that management itself is quite uncertain where that demand is going to come from, and therefore I just find it very interesting that you would want to bet on a capex story.
But CJ, it's always better that you don't guide and then surprise positively instead of making lofty guidance and then setting up the market for disappointment.
I would never be a champion for leaving your investors in the dark, Santo. That said, lastly, you talked about it, you also touched upon it, the ongoing chip shortage. That has been one key issue that has been plaguing a lot of companies in this space, and Cummins India is no different to that. Clearly, even if order book gets healthier down the line, project execution is going to be a challenge, Santo. I mean, we are looking at a chip shortage that might run into 2024, even latter half of 2024. If you listen to some of the other CEOs out there. So clearly, yes, the overall demand environment looks quite healthy, but if you look at the underlying growth, I think it's not good enough for me to go and be bullish on the stock. That said, one stock there where today I am in the in the mood of taking on the market on its views. So another stock that I am a little curious about is Bharti Airtel. Now, clearly the stock has underperformed the broader market this year so far, but I just feel given the earnings performance, Santo, it's just so unjustified. It just feels so unjustified given the sort of numbers that Bharti Airtel been putting out quarter after quarter. If you look at they've been gaining revenue market share from Vodafone in a lot of the major circles, and Jefferies believes that the stock is the best way to play the higher mobile tariff rates.
Quick break, CJ. Market has opened, Nifty is up about 150 points.
Quite a healthy start, Santo.
Yeah, 1500 stocks up and less than 200 stocks down over the previous close. Nifty Bank is up about 1%.
Yeah, and the market breadth is also quite strong. If you look at the NSE, about 1550 stocks in the green territory, while only 166 stocks are declining at this juncture. Clearly, a broad-based good start for the market. Nifty Mid-Cap 100 index is up by 1.1% at this juncture. Among the stocks, you're seeing UPL, ICICI Bank, Tata Steel, IndusInd Bank, and Tata Motors driving the gainers on the Nifty 50 at this juncture. Yeah, coming back to Bharti Airtel. So Santo, lastly, my last point is that Jeffries said this, and I quite agree with them. They believe that Bharti Airtel right now is the best way to play the rising mobile tariffs in India. I mean, we know that tariffs are on a higher trajectory. Bharti Airtel has suggested that probably by the end of this year, they'll be able to reach that 200 ARPU mark, and probably next year, we could be closer to the 300 ARPU mark going ahead. So clearly, this is one stock that deserves much better from this market than what it is getting at this point of time.
Probably, CJ, but the stock price again has been underperforming for a while now. It touched a high of about 720 plus 730 odd 4 or 5 months back, and since then it has been on a downward trajectory. Now the thing about tariff hike is that yes, this was the story till about 5 or 6 months back, and now, judging purely from the stock reaction more than anything else, it looks like the market may have figured it or probably discounted it. The other thing is that going forward, will the company be able to hike tariffs at the same pace without facing resistance from consumers? Probably that is again something that the market seems to be worried about, and which is reflecting in the stock price. And there are some other negatives as well. Remember, the company will have to pay for 5G spectrum, and that is again going to put pressure on the earnings in the short term. Maybe the longer term it's a positive for the company, but near term again you're going to see that pressure. So you're talking about the earnings being good and the market ignoring them. This is where the market is looking, saying that because of this aggressive bidding for 5G spectrum, you could see pressure on earnings for a while. Lastly, you have got higher diesel prices also, which increases the operating costs of towers. So these are all factors that I think market seems to be concerned about, and which is reflecting in the stock price right now.
Well, Santo, when you talk about tariff, so far telecom companies have raised tariffs only once a year, going back to 2019 when the first tariff hike was made. And I feel even this year there is only expectation of one hike in late 2022, and then probably another hike in 2023. So clearly the trajectory has not changed, and I don't think that that will also change, because so far it seems like consumers still are showing appetite for tariff hike, because Bharti Airtel, remind you, unlike Jio and Vodafone, they have actually not lost customers over the past few quarters. They have in fact added more customers over the past few quarters. So clearly this company is able to retain the customer base while also charging them much more for the services that it is giving.
Well, the last stock on our watch list today is Borosil Renewables, clearly a play on the rising demand for solar energy in the country. This has also been a steady performer. The stock has been flat, since the start of this year, and that's no mean performance, considering that some of the biggest names have been down by 20 to 22 or 40%. Now, this company is one of the dominant players in the solar glass manufacturing segment, and it has about a 40% market share, and the company is fairly confident of being able to maintain that. Now, India's target is about close to 300 gigawatts of solar power by 2030, and for that the demand for solar glass is going to increase quite high. Now, there will be fair bit of imports, no doubt, but this is Borosil Renewables is one of the oldest players in this segment, and so it will should be able to maintain its dominant positions. Also, its production right now is about 450 tons per day, and that's expected to rise to about 1100 tons per day with the commissioning of its third furnace plant. Decent set of fundamentals. The only negative probably which I saw in the company's numbers were in the balance sheet, where the inventories has suddenly risen and the working capital has risen. But on the whole, I think if you are looking to play on India's growing demand for solar energy, then this is one of the companies that stand to benefit the most out of it.
Well, Santo, my only concern for Borosil, of course, if there is expansion of solar power capacity, clearly they will end up benefiting from the demand for solar glass, but solar panel glass, that is. But I feel that in the past, solar, whenever the cycle has started for solar energy expansion, it has always ended up dying up because tariffs end up going so low that it has become almost unviable for producers out there to expand capacity further. So for me, that would be one major risk that the company could face, that if solar tariffs keep on inching lower going ahead, as more competition comes into the sector, as well as there is higher capacity being added, then it could probably lead to eventually a situation where power generators will not want to expand capacity too much, and that could ultimately end up hurting demand for solar panel glass, especially if this happens after you have expanded your capacity so considerably as Borosil is planning to do that. Apart from that, even if you come back to the technicals of the stock for the near term, the stock clearly lacks momentum. As you mentioned, it has been flat throughout this year, and even looking ahead over the next 2 to 3 months, technical analysts are not really convinced that the stock has momentum to probably give any sort of meaningful upside in the next 2 to 3 months. And that is quite obvious, of course. If you look at the past 1 year's performance, the stock has more than doubled in the past 1 year. So clearly a lot of the positives, a lot of the theme play that you're talking about has been factored into the prices, and any upside now will only have to come from earnings performance, Santo, going ahead for me. So clearly one stock that I would rather wait and watch. I will not totally ignore it, but I would rather sit on the fence, see that earnings performance come through, and then probably enter the stock.
Well, if you were to go by technical indicators, CJ, right now, the number of stocks that are showing a positive momentum, you could probably count them on your
That is the reason a lot of people are sitting on the fence, no, Santo? As you mentioned, that volumes have hit 2 years low. That is the reason.
Well, on that note, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And as always, stay tuned to moneycontrol.com and the Moneycontrol app for rest of your financial news. We will catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.